The coronavirus pandemic has affected lives and livelihoods everywhere. But the poorest people, like those living in the slums of Nagpur, India, are among the worst affected.
We don't have money to buy food. How will we buy face masks? Nobody is helping us, and we have no work. I would rather feed my kids than buy masks.
During the outbreak, many of them have lost their jobs. Those who've fallen sick are often unable to afford quality healthcare, and they're likely to keep suffering in the aftermath of the pandemic.
So we're seeing inequality within countries grow. You're seeing low-skilled workers being much harder hit, women being much harder hit, younger people being much harder hit than others are. And this is going to have intergenerational consequences. We're also seeing globally that poorer countries are headed towards worse futures than advanced economies are.
North American and European governments, along with China, have doled out more than $5 trillion in stimulus spending this year. That's helping their domestic businesses recover faster. The IMF has upgraded its outlook for advanced economies this year to a 5.8% contraction. Meanwhile, rising unemployment and weak demand in emerging economies have led to a downgrade in their expected GDP to minus 5.7%.
The cumulative hit to per capita income for emerging and developing economies, excluding China, over this year and next is projected to be greater than that for advanced economies. Now, this crisis will leave scars well into the medium term as labor markets take time to heal, investment is held back by higher uncertainty and worsening balance sheets, and lost cooling impairs human capital.
Besides hurting the long-term growth prospects of these economies, the pandemic is also threatening to plunge them into a debt crisis. External debt owed by 111 low and middle-income countries has risen from 6% to 8% of GDP over the past year. They owe $480 billion to private bondholders and another $55 billion to banks. And they have to pay $130 billion in debt servicing this year. G20 countries are extending a lifeline to the poorest economies by deferring the money they owe by 6 months. But this hiatus applies to government debt. There is no relief for private sector borrowers and no mechanism to restructure sovereign debt in light of deteriorating economic conditions. Experts say without a plan to cut this burden, emerging economies could default on their commitments. That could worsen the conditions of millions of poor people who are already struggling to survive. Mobin Nasir, TRT World.
Well, let's get more on this now with Torek Farhadi in Geneva. He's a former economic advisor at the IMF, World Bank, and the United Nations. Torek, good to have you on the program with us again. The G20 group has agreed to extend suspension of debt payments by an additional 6 months, but the IMF and World Bank had been pushing for a 12-month extension. Why just 6 months, and is that going to help at all?
So debt relief and debt service relief are two different things. Debt service relief is just a payment for interests, and originally it was decided for 6 months to pay to put a moratorium on the interest payments. Now we are talking about 12 months instead of 6 months. In reality, some of the countries which owe debt to the IMF and the World Bank will need debt relief because their economies, as we just saw, has been hit pretty badly. The developed economies in the United States and Europe and Japan have been able to spend a lot of money on the crisis, trillions of dollars. But if you look at sub-Saharan Africa or Southeast Asia or South Asia, they haven't had the same firepower to spend money on the economy in order to give it a shot back, to gain an ascent back to the level it was before pandemic. And at the micro level, it means a lot of jobs lost, a lot of orders lost. If you look at Bangladesh, for instance, the fashion industry has canceled $15 billion of textile orders. And this represents workers, mostly women, sometimes in the informal sector. And those jobs will come back, but they will not come back as quickly as possible. They might come back in 2022. Tourism is another sector. Travel is another sector. Tourism and travel is still affected in the United States. And the numbers that we see from the IMF are skewed in a way because they comprise the developed world, which has a bigger weight, but in fact, only 4.2% of the population of the world lives in the United States.
Torek, thank you for that explanation. The World Bank, though, says the amount owed by the poorest countries was at record levels even before the COVID-19 pandemic began. How can countries achieve long-term debt sustainability, and how crucial is it for these countries to get on sustainable ground as quickly as possible?
Well, countries have been given too much debt to begin with. I think there has been many times optimism to give countries too much debt, which ultimately they can't handle. So both sides are to blame a little bit. The one who gives the debt and the one who takes the debt but can't handle the debt. It will take time, basically. Fiscal measures are needed for countries to be able to collect taxes to pay back. But in order to collect taxes, you have to have economic activity. And really, the pandemic is not finished. Any forecast right now by the IMF is a temporary forecast because even the developing countries and other countries are thinking about slowing up the opening of the economy entirely. And perhaps in some local areas, lockdowns have been discussed. So at the end of the day, these figures that we see today are going to be worse.
All right, we're going to leave it there for now. Torek Farhadi in Geneva. Thanks as always, Torek.